The markets have been mixed. The futures were up this morning, but now the Dow is down a bit. You can see down 43 points. Last week, the Dow dropped 540 points. Mike Iskovitz standing by in the newsroom with some financial experts to talk more about this deal and more specifically, Mike, what it means for our viewers.
Natalie, this is nuts. The Dow was up over 100 points. Now it's down. No, it's hard to keep up with all this. To help us do this, we have a wealth management expert, Lance Roberts, and talk show host extraordinaire. We also have Nina Wilson-Jones, a financial and business advisor, former banker as well, and John Bott, who is a master of all things related to bonds and all kind of fancy stuff that the rest of us have no idea even what it is. But thanks again for joining us. You guys are all very smart. What happened? I mean, it seemed like this morning everything was all happy. It was daisies and roses, and now all of a sudden maybe there's some uncertainty as to the support that this bill is going to have in Congress.
Well, basically somebody read what was actually passed.
Right.
Or was threatening to be passed. I mean, look, if you look at this issue that's been debated over the weekend, the debt deal, you know, we needed a minimum of $4 trillion in cuts over the next 10 years, just to even start putting it, just to stabilize our deficit problem. You need close to $1 trillion a year to actually start cutting the deficit with any real earnest, getting us back to a balanced budget type situation. $2.4 trillion over the next decade, and most of that aren't even real cuts. They're just talking about reducing spending in some areas and calling that a cut. It's not going to get us there, and the market's starting to figure that out.
Nina, what do you think? Do you think it's going to pass, or are there some question marks?
I think you've got the Progressive Caucus as well as the Congressional Black Caucus who are angling really heavily to have their voices heard. I don't know if their votes have been counted in anyway. I think, though, what the markets are sensing, a little bit of what President Obama said last week when we voted for divided government, not dysfunctional government. The way this whole thing has gone down makes me very uneasy, too, in terms of the fiscal policies that have to be put in place that will be a part of our fall, and with the economic numbers, none of that makes me feel very good.
John, as dysfunctional as things are, though, our debt, our treasury bonds, still have this extraordinarily low interest rate of less than 3% on a 10-year bond. And just to put that in perspective, you were telling us, so people still trust the USA.
Absolutely, and there's no reason for them not to trust it. We don't want to pay it. It's not that we're not going to pay it. I mean, basically, this is a political default. It's not a structural default as Greece or, you know, where they are actually bankrupt. Greece is paying 25% for their 3-year bond. You know, U.S. right now, 3-year bond is at 50 basis points.
That's good money if they pay it, though, isn't it? 25%?
Well, it depends on whether they pay you any of your principal back. The question is, if you're paying 25% interest, well, you might only get 50 cents on the dollar back when they give you your money back.
Right, like a lot of Americans and a lot of folks out there with credit card debt are probably thinking. Nina, you mentioned a moment ago that some of the progressives in Congress are expressing some concern about this, and I want to read a quote from Missouri Democratic Congressman Emanuel Cleaver, okay? And he basically says he's concerned because we haven't seen the details. Until we see the details, we can't give this support. On the surface, it looks like a Satan sandwich. This is Representative Cleaver from Missouri. So what he's saying is there are cuts involved with this, and some of them are what are being called discretionary cuts, which means we don't know what the cuts are yet, right?
Right.
What does that mean?
Well, that's very nebulous, and that's why you're seeing the uncertainty. I think the progressives and the Congressional Black Caucus are all still smarting from the fact that there was not the revenue increase or tax reform, however you want to say it. They don't feel like, you know, it was balanced in the form that the president said he wanted, but was never really part of this deal. So they're going to hold his feet to the fire with it, and even if it doesn't affect today's vote or tomorrow's vote, I think it's something that's not going to go away in this discussion.
Lance, remember back in the days of the health care bill and a lot of these big, you know, the 2,000-page bills that were passing, and, you know, we got to pass it to see, we got to vote on it to see what's in it and all that stuff. Is this turning out to be one of those situations?
Well, I was just going to, what she said, say that same thing, is that in this administration, over the last couple of years, we have done more passing of bills that are unwritten than in any other time in history. And we've now adopted this practice of, well, let's just get something passed and then we'll write it. So now we're going to form a committee to oversee the committee that's going to cut the budget, which will probably need another committee to look at that committee to make sure they do it. The bottom line of this, while I joke a little bit here, is that ultimately they say we're going to make these cuts. in reality, they won't ever get done. Everything's been pushed out until the next Congress. The next Congress is not bound by anything this Congress did. So in other words, this looks all great in the scope of it, and this is why the markets are reacting negatively this morning, because everybody's figuring out that actually nothing's been done.
John, since you're an insider, and we want to share with our tens of thousands of viewers right now, where's the smart money going right now in all this uncertainty?
Well, gold had a little pullback today that probably was a good opportunity, because as long as we can't make heads or tails of what the Congress is doing, that instability is going to go into gold. I mean, you know, I think that gold has some upside to run. You know, if you get 5 or 10% of your portfolio in gold, I think it's the best place to be right now.
Well, and like we talked about just last week, you know, really a lot of the smart money still heading into fixed income. We've been recommending that since April. And that's why you were saying earlier, you know, the bond market has never seen an event of default or an event of financial crisis or terrorism or whatever you want to call it. In this market, money's been flowing steadily into treasuries from everywhere, both foreign investors as well as domestic. Stocks are holding up near their highs. So the financial markets in general didn't buy any of this idea that we're going to have a huge financial crisis, the world was going to melt down if we failed to make a payment.
Nina, what do you think?
I agree. You know, the intelligent people who really understand economy and markets understand that we needed the debt limit increase. That's going to be done, so there's not the event of default. But the real work and the changes in the budget, that's not been handled at all, and that's what's going to continue.
Well, that's what I wanted to ask you guys about next, and we have about a minute left. Is just the fact that, okay, in the short term, this debt deal, whether it gets passed today or not, let's just say it gets passed, that doesn't solve the long-term problem of our lack of money coming in and too much money going out. So how on earth is that ever going to get solved?
Well, I mean, I personally think we're going to have to balance it out with some revenues, some revenue enhancement. I personally would like to see a flat tax with the deductions taken away on a lot of stuff, and we make the adjustments that need to be done to help the poor people that you know, get by. But you know, there's a lot that's going to have to happen to make this economy right. We got too far away from sanity with the kind of spending that has gone on in the last 4 or 5, 6 years.
Right, and exactly. I mean, you're going to have to cut spending and cut it deeply. The problem is when you cut spending, you're going to cut revenue growth, because the economy is going to slow. But it's just going to be, there is no pain-free way out of this. But there's going to if the longer we postpone doing what is necessary, the worse it's going to be down the road.
Nina, beyond this debt vote, are you hopeful? Are you optimistic?
Well, it's going to take someone standing up and being the statesman and say country first, and let the political partisans fall where they may. And I don't know where that void is. We're hoping it's the president. It probably should be by virtue of the office, but he's not really followed through on that. And with an election coming up, there's a real opportunity from someone on the right, or maybe a challenge from the left, to push towards having that person that says, hey guys, we got to do this tough stuff and get our house in order, or we're going to go broke.
Well, election season's right around the corner. We're going to be in for about another 16 months or so of dirty ads and all kind of stuff. But hey, that keeps the TV
austerity is not good for the economy.
Yeah, but maybe,
the austerity we're good.
But maybe Obama should invoke a little bit of Kennedy and say, you know, ask not what the country can do for you, but what you can do for your country. Maybe it's time.
Everybody might have to sacrifice a little bit.
Absolutely.
Oh, that hurts. We don't like doing that. All right, thank you very much, guys, for your wisdom. We appreciate it very much, and we will see what happens later on today. It's going to be a contentious day on Capitol Hill. Guys, back to you.